All right, all right, all right.
Okay, ladies and gentlemen, it's another episode of the Things I Wish I Knew About Money podcast. I'm your host, Camille Smith, and I have myself a lovely, lovely guest, Jumoke. You know what's the funny thing? Offline, we were talking about, so wait, how did I meet you again? I was like, oh, yes, yes,
Yeah.
yes. Our football team,
Yes,
the Titans,
yes, the flag
East
football, the
Side.
Titans. Yep, Titans.
So
Big up, big up, big up. Those were some good times.
right. So I
Yeah.
always like to say that I like to bring on like my family type of folks and all that good stuff, just to show people what they do, and also
Okay.
have some fun. And it's been a
Absolutely.
minute.
It
But
has.
the funny thing is, even though we played on the field together, we've also on a different family team.
Isn't
And
that
that's
something?
right. And that's the Black Moms Connection. So
That is
we have to
Black
big
Mom's
them up.
Connection. By Finlet, you absolutely got to big him up. It is so, I find that so crazy how we crossed paths, on the field all those years ago. Not that many years ago, we still young-ish. At least you are. At least you are.
It's only the face. Only the face look young.
Only the face. Yeah. No. Yeah. The face frozen in time. You good. You good, girl. You good. Yeah. No. It's crazy. Like we played on the field, and then, but how could we have foresaw back then that we would be working together in this capacity now? Because what's funny? Yeah, I wasn't even doing what I'm doing today back then.
True.
So
I think you were
it's crazy.
just starting. Because we did talk about it.
Barely.
We did talk about it. So
yeah.
I love how you've grown, because I remember you speaking to me about it, like off, because on the group chat that we always only talked about football.
You're right.
And
I just started. Thank you. You're right.
And you're like, you know what? I see Camille. She's doing her thing. Okay, let me just text her on the low. And I was like, yeah. I was like, oh, we do finance too. So I was like, amazing. And and then also when we started to do Black Moms Connection, I was like, look at it. So
I didn't even know you were doing that. I think I saw your name on the list of like presenters at some point. I must have seen something. And they were showing me the order where I come in, and then they mentioned your name, and I was like, what? There's only one Camille that matters. I'm like, yo, that's crazy. Jeez. Unbelievable. So that was really, really cool. And then from then I was like, yo, I gotta connect with you.
Right.
So that was really, really crazy. Yeah.
And I'm glad it was like the 4th session that we've done with Black Moms. So I was just like, yo.
Yeah, it's the 1-year anniversary. I saw in my own stories. I didn't repost that story. It's the 1-year anniversary this month.
Hold on. I had to do my. Oh, where's my horn? Oh no! Oh, there it is.
You gotta get the horn.
Why is it? So
don't kill me.
Anyone
You're
that
sound gal to it.
Anyone that's watching, I had to become a little professional.
Okay,
when Jumoke came through, he showed me his suit and tie. I was like, oh no, I look so casual. Hold on, let me just put on a little blazer,
You're good. I wasn't trying to show anybody up, but we here, we professional, we doing business, so you gotta look the part, put yourself together, That's it. So that's how I say I try.
Nah, you're looking good. You're looking good. Fresh to death. I had to come with the hairstyle too, you know?
Yourself as well. Absolutely. Yes. No, you look awesome. You look ready. You look presentable. You're good. You're good. You look
Thank you.
great.
Thank you. So do you, sir. So do you, sir.
Absolutely.
So
Thanks.
I guess people are wondering, like, okay, so why did Camille decide to put you on? Well, because we were doing Black Moms Connection, and I know you were doing savings, and I was doing budgeting.
Correct.
But I know that you specialize in other things as well.
Mm-hmm.
I just wanted you to tell the folks, like, what do you do? You know, what do you do?
What do I do? Absolutely, absolutely. Well, for the audience, well, you did say my name correctly, so I appreciate that. You got the pronunciation down. So yeah, my name is Jumoke Johnson, right? And I'm a senior investment and insurance advisor with VFG Financial Group is my brokerage. Right. So you may not have heard of us. We're a small shop, but we're a great shop. So I've got an awesome team backing me. And we pretty much deal with everything. We're essentially in the risk mitigation business, I would say. Right. So, ultimately, my primary focus and responsibility is when I work with my clients, whether it's entrepreneurs or families, a big part of my portfolio, parents, moms, dads, etc., children, is really just protecting them, letting them know what tools are out there. So my value really comes in, and like some people don't always really see the value in AKA, financial advisor is our well-known term, right? However, I believe that I show my value in because I'm plugged in to the different solutions and products on a monthly, weekly basis. Just knowing what's out there, right? Nobody really knows. Insurance is a very complex product. There's a number of different options out there, different providers, different solutions. So it really is about finding out what it is that finding out where those gaps are for an individual. Really trying to find what the unique solutions are for them to protect their income, grow their income for the short, medium, and long term. Make sure that if God forbid, if there's premature death, I don't know when we're to talk about death. Although for the past 2 years has been nothing but on the news. You got the death ticker every day. How many people are passing away? God bless those who have lost a loved one during this pandemic. Is never an easy thing. So, but yeah, this is what we do, right? I mean, if there was ever a time to lock into some of these types of products over the past 2 years, if you haven't, today is the best time, right? So in a nutshell, that's kind of what we do: risk mitigation, and try to protect people's wealth.
I like that. Protection of wealth is very and building it is very essential because I feel like our community still hasn't been able to what's the right word? Realize how important like any insurance is. We always think about, most times we think about life insurance because we know there's been a lot of GoFundMes, and every time I see a GoFundMe, I actually it breaks my heart, right? So I really, and I don't know if you've heard when Nicole was on previously during National Insurance Awareness Month. She actually asked me and Andre how many times do you guys actually discuss life insurance with your family and friends? And I'm like,
that don't happen
because people are scared to talk about that, right?
Yeah, it's true.
And even though I've gone through that last year, I've tried to promote it even more, even though I knew about it. But then the thing is, there's stuff that we have to protect when we're still alive.
Yes.
Right?
Yeah, exactly. And that's it.
I'm not gonna sugarcoat it. I have a list of things to do.
Okay.
So those are the things that are actually important, because I actually know a family friend that they had they had a stroke twice, and they told me that they had, I'm going to say critical illness.
Okay.
I might have to correct myself later on, but they got a lump sum. Like the first time. Yeah, so they got like the first one, they were protected and they got a lump sum. However, the second time they couldn't, because obviously they had to add it when she had the first one.
Right.
And I was like, this is the second closest person in my life that had a stroke. So it's like, no, that's a lie. Third. But she survived. So it's been in the back of my head. But I don't think a lot of people know about like the critical illness and which one? Disability?
Disability? Yeah,
so
like, for sure.
What can we actually educate the audience about that? Because I'm not gonna lie, I'm still, I'm not gonna say I'm ignorant about it, but I still haven't pinpointed.
Yeah, no problem. Yeah, no, I'm sure you've had enough finance conversations. I'm sure you're somewhat familiar with it all. But yeah, no, we can dive into it. You said a few things that kind of want to unpack there. You mentioned, for example, sometimes we don't see the value in life insurance, right? For example, and some of the tragedies that happened, like look what happened in New York. I'm not sure if it was the Bronx that building, I think it was in the project where it burnt down and a lot of people lost loved ones, like family members in that tragedy, right? So there was that, and then I think Cardi B picked up the tab, right? So that's a perfect example of what you're talking about, right? And I have these conversations and we talk about it, like, imagine, and no one planned that. That was obviously some sort of a tragic accident for like a number of units to go up in flames.
Exactly.
But a lot of young people lost their lives, right? Working class people, 30s, 40s, children, I think maybe. But I don't know much about that situation in terms of the demographic.
Many children, yeah.
But this is exactly an example of one of the reasons why we want to, and it's about financial literacy and education and awareness. So sometimes we don't see the value until it's too late, right?
Correct.
Can you imagine if a handful of those parents had $1 million policy or a $500,000 policy, right? This is a very unpopular conversation. I don't want anyone to be offended, but we need to talk about this, right? I want to be conscious. We do need to talk about this. Maybe in the comments when Cardi B is announcing it in the comments on social media, isn't the place. It's unpopular opinion to have at that very time. So definitely shout out to Cardi B for stepping up. But at some point we have to have the conversation, right? There's never a good time to have the conversation. Sometimes better times than others, never the best time. But if some of those families had, or all of those families had, even a $500,000 life insurance, that's an automatic, injection of cash into the community that can help to take care of the educations for a lot of those. Let's say a parent passed away and let's say a toddler was off at school. Their parents are gone. But the kid can have now a trust fund set up because there's $500,000 or $1 million, right? Because maybe it was a term policy, not very expensive. Term is cheaper than permanent, right? So if we're talking about, the projects or lower income families, term is the best solution for them to take care of the short to medium term need, right? And then the amount of cash that's injected into the community is staggering. You can do a whole lot more in terms of building your family and building your community if everyone had insurance, right? We don't even have to get into the whole policing aspect of things and people losing their lives to the police. If there was that, and if they knew that we had insurance and insurance companies had to pay out because we were losing our lives in the hands of the police or even each other, or even if someone wants to challenge me, well, what if it's just the fact that, it's Black people doing it to other Black people? Well, if that's the case, and we can get deeper, right? If there is gun violence and someone does pass away, more often than not, that insurance policy is paying out. Now, the ugly side to insurance, because I'm very open and I'll share it. Yes, sometimes there are exclusions. Not sometimes, there are exclusions to life insurance, right?
Yes.
I do share these with my clients because I'm very open with them, right? And this is also And some of those exclusions might consider, in some cases, suicide, right? Depending on some specific circumstances.
2 years, they usually say.
Yes, good. Yeah, very good.
I know my stuff.
You do. That's pretty good. I'm very impressed, actually. That's something that's not well known.
Yes.
It's typically 2 years, right? Insurance companies don't openly talk about this. But there is sometimes I don't even necessarily see it in the policies. You have to ask. Your advisor has to ask, right? But yeah, and not necessarily in all cases. Every insurance company is different, so it depends on what's in the contract. It depends on that company's internal policies. Okay, so that does matter. With more traditional carriers who are like for healthier clients, you will find that to your clause more often than not in those cases. For your higher risk clients, you may or you may not. I can't say definitively either or, because I have to look at every case, every company. As a broker, I have access to a number of companies. I'm not captive, so I'm not working with just, Sun Life or just Manulife. I'm working with a bunch of different carriers.
And also every person is different, because like I remember my mom, when she was trying to get it, she had prior things. So it was like, if we give it to you, it's gonna be this much. So it was like, it was better to just like save a whole heap. And then that's when you come into mind, like, you got to do it early before there's conditions that hinder you, right? And I think that goes with any insurance, especially car insurance, because if you get into too many accidents,
right? Exactly,
they're gonna skyrocket. So I think if people think of, and you know what, I think the way people think about insurance is like car insurance. Like, I always have to pay this hefty bill.
Right.
Never get into an accident.
Okay.
What's the point of having it? And I think, and you know what's the difference?
And it doesn't give you anything back. You don't get no refunds.
Yeah.
No rebates.
The difference with car insurance and life insurance, or even disability and critical, is we're guaranteed that your life will end. So why not protect it?
True.
And most life insurance are cheaper than car insurance. Especially if you're in Brampton.
Yeah, man. If you're in Brampton, my gosh. Yo, shout out to Brampton, all my Brampton people, but that car insurance is no joke in Brampton, that's for sure.
I know. I'm just like, ooh, you gotta live in Brampton.
But here's where I will say life insurance has the edge. Like life insurance, critical illness, or like disability, for example, have the edge on car insurance, is that depending on the policy and your underwriting, like your health, there's policies that you can get your money back. So for critical illness, for example, there's policies where you can get your money back. It's called return of premium, right? So it's almost like a forced savings. So like, let's just say, to your point of the critical illness, if you have, it'll cover things from like a comprehensive plan will cover, 24, 27 illnesses, something like that. So, cancer, heart attack, stroke, deafness, blindness, severe burns. If you end up caught in a house fire and you get severe burns, lose an eye, lose a limb, arm, leg. It's really kind of gruesome stuff. Like, but there's over 20 or so, right?
Yeah.
Conditions that can be covered. And if it's a traditional carrier where you're healthy, because critical illness is one of the hardest things to get approved for. It really truly is.
Really?
So you really need to be, in good physical and mental health in order to get qualified and approved for critical illness, right? So sometimes a medical past can end up in oftentimes a rating or a decline. What does that mean? I just threw out terms there. A rating is I'm going to explain that. So let's just say,
write these down. I hope everyone's writing these down, because I'm writing them down as we speak.
Yes, for sure. I love to share this information. So a rating, for example, now I'm going to give you a nice round number. Not saying that critical illness costs this much. Disclaimer: critical illness does not necessarily cost this much, but I'm going to give you a nice round number for an example. Okay. As a matter of fact, it doesn't cost this much. So let's just say critical illness costs $100 a month, for example, right? For someone who's like 25, 35, 40, it's not going to cost that much. Just, I can tell you that right now. Even 50, it's not going to cost that much. But let's just say it's $100 a month.
Mm-hmm.
If you're rated standard, everything's cool, you're healthy, everything's good, they're going to say, okay, you know, because we apply to the insurance company. The insurance company looks at our medical profile, and then they respond with an offer, right? If they say you're standard, that means you're good at $100 a month. So if the advisor did a quotation on you and it's $100 a month based on your age, sex, smoking status, and your overall health, and everything's good, you get a number. Let's say $100 a month. If you have some health conditions, right, that are kind of like, it's not the best, like that might raise a few red flags. There's some risk there, because they're in the risk mitigation business, the insurance companies. They want to know who you are. They want to know about your lifestyle. Do you race cars? Do you scuba dive? Do you skydive? Do you have a bunch of traffic tickets? Like, there's lifestyle questions to this. It's not just about your health, right? Do you have
so we can't lie about it.
No, and you let's come back to that. Thank you so much for saying that. So all those things. So if you have a medical condition from your past, they'll see that when they run your MIB, your Medical Information Bureau. It's like a credit card hit. It's like when you apply for credit, Equifax gets that hit. MIB is your credit on your health. So basically, anytime you go to your doctor and they write their notes and stuff like that, or any time you go to the hospital, stuff like that, that's your medical file. So when they run your MIB, they can see your medical history, right? Based on that, they say, you know what, there's some stuff in the past we're kind of okay with them, but there's some risk there. So we don't feel all the way comfortable rating him or her standard. We're going to have to rate you. So let's say they rate you 50%, for example. That means instead of $100 for that $100 policy, they might charge you $150 because you're rated at 50%.
Okay.
Does that make sense?
Yes.
Or maybe you're rated at 100%. So instead of $100, it's going to cost you $200 for the same coverage. Okay, so that can happen for life insurance or critical illness, right?
Yeah.
It's up to your advisor or you could be declined, right? A decline on your insurance policy is similar to having a decline on a credit card when you're applying for credit. Okay, so you want your advisor to do the best they can to do all the digging, all the questions, the Q&A. They'll ask you a lot of health questions. Past 5-10 years, have you ever had to do this, had to do that?
I remember all them questions there.
So this is why life insurance and critical is not always easy to get. This is why it sometimes gives people anxiety to even apply for it. But you just got to ask the right questions, and then you apply to give your client the best chance of a successful outcome, right? That just comes with asking questions, and you can do what's called a preliminary as well, where you submit the information blind with no name, just age, sex, and smoking status, and then all the specific medical information that you can. And sometimes an insurance company can get back to you with a blind preliminary. This is what we think we would do. Sometimes they need more information. They'll just say, you know what, apply and let us know. We think it would be this, we think it would be that, but we don't know for sure unless you apply. So, you just do the best that you can. Yeah.
So, question, when it comes to a situation like that, would it be wise to warn your client and then give them that like price range? Because like, imagine if I came to you, I'm like, yo, okay, I can only afford $75. What can you do for me?
What can I do for you?
And then but then I say like, yo, I like to scuba dive. I smoke. I don't smoke. I drink every day until I knocked out and all that stuff. Then you're like, are you sure?
But it's better for me to know that in advance though, before I apply, because it's better for me to know. And I like how you asked that question, because you want to be upfront with your advisor, just like you want, if you're in a bad situation, you want to be upfront with your lawyer. You want to tell your lawyer everything that happened in the situation. That way they can defend you better. Okay. And you can trust your lawyer. They can defend you better. Same thing here. If you tell your advisor everything about your health history, they can figure out what's the best route to hopefully avoid a rating. So if you have someone with a lifestyle where they like to drink all the time, or if they they have like they drink heavily, for example, I know that's subjective, heavily. If they like to smoke, right? Cool thing. Some people don't even know. Ever since they decriminalized cannabis in Canada, there are some providers who will accept up to 4 spliffs per day. I mean, per week. Sorry, per week. 4 spliffs per week. Cannabis only. I know per day.
Because people like, oh snap!
I know, right?
I'm like, no.
I need to clarify that for sure. I gotta clarify that. 4 spliffs per week. Okay. Cannabis only, no tobacco, and you can be rated a non-smoker. Okay. 4 to 6, right? In that ballpark, non-smoker, right?
So
if
for
you're smoking
the
cigarettes,
weed heads,
smoke 1 cigarette in 12 months, you're a smoker. But cannabis, up to 4, no, right? No nicotine, non-smoker. Cool.
Okay.
So that's everyone who's watching who may have friends or family who smoke. They don't care about edibles either, by the way. That's cool. You can do edibles and you're still a non-smoker, right? That's cool. True. But you want to be honest though. Yes. Because, and this is where it gets into why insurance also gets a bad rap. People don't trust it sometimes. There's that narrative in our community where we don't trust, like, y'all just take my money, you don't pay out. Insurance companies that I deal with, some of them, I know one of them for sure has a 99.6% payout rate. 100%. I've seen them pay out 99.6% payout rate. And I think it's the way that they structure themselves and the way that they ask questions and stuff like that. It's like pretty much, guaranteed. So unless, and this is, let's remember this, insurance is a very private, personal thing.
That is true.
Let's just say I'm dealing with a couple who's married, for example, right? Or common law, doesn't matter. There's a couple, they trust each other, they don't, whatever. I don't know, right? I don't know what's going on behind those closed doors. So when they both need life insurance, and this is how I do it with my clients, I will have a meeting with him and I'll have a meeting with her. Okay. Because when it comes down to it, and we get to the beneficiary question, what if she wants him as partial beneficiary, but also wants her sister or brother as partial beneficiary? But what if he has a problem with that? Really and truly, it's none of his business, right? And vice versa. So I don't have these meetings where everyone's on the call, and I don't go through these questions with both of them on the call because I don't want there to be any uncomfort there. And I don't want anyone to feel obligated to pick beneficiaries just because their partner's on the phone. Yeah, I'm on the outside coming in. Yeah, no, it's a very personal thing, right? You never know. You just never know, right? I have clients who the husband has, the wife, for example, whoever has put
I thought you were gonna say siblings.
Something. No. I got all kinds of stories, man. But yeah, like you just never know.
Or something.
Oh gosh, no, I haven't seen that yet.
Oh,
I'll let you know what I do though. I'll be like, yo, could we get? No, I'm just kidding. I'll leave the names out of it though. But yeah, no, I have never seen that yet.
Okay. I don't know why I went there, but yeah, so siblings, funny. Of course.
Yeah. So siblings could be on it, right? But it's just a very personal decision, and I don't want anyone to ever feel uncomfortable.
And they get steered away as well. If you have, like, say you had a family, they'd actually be steered away. They're like, I want to give you 10%, but because you're here, I'm gonna say 50-50. Right. But then after, be like.
Yeah, they feel exactly after they call me later, say, yo, let's just change that real quick. And you can change the beneficiary, right? As long as it's revocable. Irrevocable, you cannot change the beneficiary. And so always make sure it's revocable, because and I'm gonna take the married, I want the audience to hear this, because I'm gonna take the married couple as an example. You have a married couple, right? They put each other as irrevocable beneficiaries. They're young, they're 21, they're 20, 24, whatever. They're young, they're in love. I'm gonna be with this person forever. We're never gonna be apart, right? The whole thing, young love, right? It's a beautiful thing, got the butterflies and everything. So, 10, 15 years later, 2-3 kids later, right? Things mash up, they split, completely forgetting that they put each other on their life insurance policies. Or maybe they don't forget, and maybe they remember, like, you know what? I'm remarried now, let me update my policy to my new beau, my new wife, or my new husband, right? Yeah. Call their advisor. Can we change it? Nope, sorry, they're irrevocable. Your ex is gonna have to sign off on you changing them off it. Let me tell you, Camille, in most cases, exes will not willingly do that. You can take it to court if you want to. That's a tough one. Irrevocable beneficiary, that's a tough one. So, and what's happened is, in the past, people have gotten remarried, passed away, and the ex got the money. The current wife couldn't get the money. The advisor can't do nothing about it. The insurance company can't do nothing about it. It's a legally binding contract. I need people to understand these are contracts. Just like professional athletes sign, these are actually life contracts. Critical illness, these are contracts. Okay.
That's
so when you look at it from that perspective, yeah, it's a game changer, right? So I always do revocable so that the owner of the policy can change that out, right? That's important. And I want to also key in on one thing you had touched on, the privacy aspect of it. Like, shoot, where's it going with that? Oh, when one of the concerns that our community, that I want to address and I want to share is the perception, life insurance doesn't pay out. Like, I know people who have been super, super upset at life insurance companies on social media, within their own circles or online, and they're outlashing, right? They're lashing out to insurance companies.
Mm-hmm.
Now, I'm not going to sit here and say that insurance companies are perfect. I'm not. Like, I'm not going to sit here to that extent and say, we don't ever make mistakes or they don't ever make mistakes. But there is also an element that, because we talked about being honest on your application, there's no one else on the phone when we do the application. The only people who know what was discussed during the application process is the advisor, the client, and God. That's it, right? So if someone lies about, say, their smoking status, for example, right, we'll just pick that, or the fact that they never had any sort of like heart issues, for example, and then they pass away, right? And let's just say the policy is not mature or not mature, whatever the case might be. Pass away, and then the autopsy is done, and they find that it doesn't line up with the questions answered on the, that oftentimes can be why insurance does not pay out. That's why I said earlier, always tell the truth on your applications. It's better to pay a little bit more for insurance than to try and lie and get away from something just to save a few dollars on your policy. Because if that policy doesn't pay out, your families, the beneficiaries, they were not on the line when you applied for that policy. Now you're gone. You can't even defend yourself, speak up for yourself, and say either I didn't understand the question properly, or I kind of lied. Like, no one's gonna blame the dead. They're gone. No one's gonna blame them. So that's something we don't know. We never know what was answered and what was answered on that piece of paper when they applied. And that's one of the major reasons why insurance policy doesn't pay out. The other reason why it may not pay out, critical illness, for example. I've heard stories of that not paying out. Why? Again, let's talk about the fact that it's a contract, okay? I'm going to use breast cancer, for example. Everyone knows breast cancer. There's all kind of breast cancer awareness, right?
Yes.
When critical illness was brand new, decades ago, stage 1 breast cancer was paying out. Like it was
that.
Printed paper, okay? Now, because of the advancements of technology, and because the survival rate for breast cancer is so high, there's so much research and development with breast cancer. People are surviving more than ever. So the definitions has changed over the years. So now what you'll see in a modern critical illness policy, you'll often see life-threatening critical illness, like life-threatening, which is usually a more advanced stage, maybe stage 3, maybe stage 4, right? That's usually when it will pay out. So you got to be kind of dire, but you still have to be surviving, right? That's an example, right?
Level 3 to level 4.
So it comes down to the definition. So you can have cancer, you can have stage 1 or stage 2. But if it's not life-threatening, if it says life-threatening in the contract, it's not going to pay out.
Oh, okay. So I'm glad you mentioned that. So folks, okay. And I know I'm guilty of this. When we have our contracts or we have our, rule and regulations, and they're like, oh, just sign up I read it. But we have to actually start reading these contracts, because if you were to like skim through that, and then you have level 2, knock on wood, you're not gonna get paid out. And how frustrating is that? Because I know the lump sum is a significant amount, enough to like keep you a bind for like a couple months or years. Like I know the family friend, they've been good for a good couple of years. So it's like,
okay,
dang. And what would you say? Okay, so say I not me, I'm just gonna say a person.
Person. Don't use yourself. That's fine.
A person got the lump sum of the critical illness, I always have to think about taxes. That is not, is that
It's tax free.
It's tax free. There, that's
Tax-free.
the word.
That's another reason why life insurance is so powerful. We have to remember, like taxes is something we most of the times we can't get out of paying, right? You can defer it. In some cases, you can, whatnot,
Reduce.
your RSP, reduce
Yes.
it, right? But that's why insurance is such a beautiful thing. Like oftentimes we don't mention enough how huge it is. That's income that's tax free. So let's just say let's just say you make $50,000 a year. Someone makes $50,000 a year, right? If they get diagnosed with an illness covered on the contract, they have to go for surgery. They have, they go blind, they lose a limb, whatever the case might be.
Yeah.
That 50,000 pays out. That's tax free. So your income is still set at 50 grand. Now you made 100 grand in that year, right? In this illustration, but you only taxed at 50. So insurance is so powerful. So not only is it almost like a forced savings with a critical illness policy, because either you can get your money back,
correct,
right? Either 80 to 100% get your money back, decades into the future,
yes,
or you're getting paid out. Either way, it's tax free, right? So
that's actually really good.
There's an incentive there. Life insurance pays out to your beneficiaries a lump sum tax free. So when it pays out that $1 million policy, for example, to your children who might be working class, let's just say, let's say they're making, again, $40,000, $50,000. If they get a beneficiary for $1 million policy on top of their income, that tax bill will be crazy, right? You're the tax lady, you're the bookkeeper, you do the accounting. So what income bracket does that thrust them into at $1 million plus, right?
Jeez, the top.
But guess what? You get to keep 100% of that because it was life insurance transferred to you, no tax, right? So that's is that not a beautiful thing?
That is like, jeez. And I hope people are listening. Imagine. So I'm just gonna do a ballpark number. Sure. Imagine you're paying $30 a month for insurance, life insurance. I'm gonna assume it's term because I'm thinking about folks that are, not as fortunate as others. So $30 a month. Their kids or loved ones are gonna be left with $1 million. Right. You know how much opportunity they'll have, and also educating them. Access. It's like so
it's crazy. Because look, I used to do gymnastics when I was a kid, right? I used to do gymnastics. I loved it, right? Yeah. And I wanted to go to the Olympics, all of it. Yeah, it was my dream. I wanted to be an Olympic gymnast, and I had to stop because of money. Finance. Like, my parents had split. There wasn't enough money to keep me in gymnastics as well as all the extracurriculars and whatnot. But I was good at it. I loved it. Yeah. But it always comes down to money. So often in our community, we have so much talent, so much wisdom, so much smarts. But how much kids can't go to those schools? How much kids can't go pro? How much kids can't, do whatever they do and excel at it? Why? Because of money. Damn. So, that's life insurance is one of the most liquid. You can have all the real estate in the world. If you pass away and you don't have a will, try getting that money out in any easy, quick fashion way. Like that is all going to the estate. There's lawyers that are going to drain the estate. You got to fight with family over this, and that. Life insurance is the most liquid way to guarantee, a transfer of wealth tax-free that you can literally use that money to handle and settle the estate. You have money going to your beneficiaries. Now you can hire the lawyers and legal representation to settle the estate if there was no will, right? To sell a house or to do X, Y, and Z, right? Instead of having all that money locked up in the estate or locked up in the bank and you can't get access to it because there was no will, right? Shucks. Life insurance can solve a lot of problems that a lot of us don't really think about, right?
Yeah, that's shucks. There's so much, and I'm glad that you mentioned like previously that you reach out to like the families and especially like the moms and stuff because
for sure
those are the core people, right? Because when we help a family, we're not only helping like the moms, dads, and grandmas and stuff. We're helping the kids. And when you help the kids, you know what's gonna happen in the future. Like
absolutely, right?
They'll be way further than we are.
That's it.
But we were having and I'll say like the bully beef and rice. And you're like,
yes, exactly.
oh, I don't want this anymore.
Exactly. You got options now.
Right?
You can have some salmon for dinner more often. You can have some,
My gosh.
I'll still take the snapper. Give me that escabeche though. Give me that escabeche. I'm still throwing that down. Oh, I'm still putting that down every time.
Oh, that's like some luxury type of things. Because you see I'm not even gonna say like any restaurant, but I'm gonna say Uber Eats. Whenever I'm trying to get a snapper, I'm like,
okay. You can find a good one on Uber Eats? For real? You need to let me know where that is.
Man, let's just say most times it's okay. But like, look what we did. Like, look how we were able to get an incentive with food, right?
True.
On the thing.
Oh, yes.
I'm trying. You know what? You know when you want to be fancy because you're like, oh, I don't have to pay for it. So like, let me just get something nice. But the other day I got, and it was like, I wanted wings. I was craving wings, and I was gonna get wings the day before.
Yeah.
But then I was like, yo, there's food at home. I'm going to get like this gift card. Let me just get the wings the next day. I should have got snapper,
You should have got the snapper. Wow, amazing. Yeah, I guess they'll pick up from Jamaican restaurants too, huh? Okay, that's all right.
They do, but
I've never tried that.
Okay, I don't want to dog any restaurants, but there's been restaurants that I get snapper and it's kind of dry.
Gotcha. Yeah.
But I like it like that. But it's like I feel like I have to warm it up a little bit more.
I got you. Okay. In the oven though, right? Not the microwave.
Oven, yes. Of course. Like,
thank you. All right. Good. You're about to get judged, just so you know. Just good. I'm glad.
Okay, I'm not gonna lie. There are times
it has happened. It has happened. Sometimes we're hungry. Like, you don't have time to wait that 20 minutes.
Right?
I'm hungry now.
Just do a little quick 30 seconds.
I get you.
Because I like it. I like it room temperature.
Okay, fair.
Don't judge me.
Oh my gosh! All right, we're talking about fish now. We can do that all day.
Right? But like we're able to give access to the families. Yes. But what about like
absolutely?
What about businesses and entrepreneurs? Because
we
don't know about Yes. Here's the thing.
Sure.
How am I going to say this? So a lot of folks have not gone to certain places because, as you know, when you work at a company, you get benefits.
Yes.
Right?
True.
So, you can go to the doctor, you go to the dentist and all that good stuff.
Yep.
But as we know, as entrepreneurs, you don't get them benefits.
True.
Right?
Exactly. Yeah.
And it's like, I know a lot of people, because especially like with certain workplaces, they're just not catering to any like people anymore.
Right.
So like, that's also important. And I think you do that too, correct? And then if I think about it, you don't even have to be an entrepreneur to get it. You can be a personal person that wants benefits because shucks.
Yep, for sure. Every company's different. It's hard to every company's different. Everyone's benefits package are different, right? Yeah. But yes, for the entrepreneurs, they don't have the health insurance is usually the biggest thing, right? So the dentist can be pretty expensive.
Some bills.
Yeah, right. So dentist, glasses is very common. Any medications that might be on. Mm-hmm. So there are standalone independent policies that you can definitely take out. So there's all kind of providers, that have access to those. A broker's probably the best one to, shop the market for you. But yeah, that's definitely available as well. I have
Mhm.
access to those. And you know, and I'd probably say, a hack for anyone who is looking
Ooh,
for health benefits. The best time is actually in the fall
fall.
because you actually to get them. So, and the reason
Mhm.
is because you typically when you first take out the policy, it's considered year one, right?
Okay.
So let's just say
Yes.
September, October comes, you apply, and let's just say you go to the dentist within the first, in the fall before the end of the
Mhm.
year,
Yeah.
um, for a cleaning, for example. That's your year one. Then what happens is year two, sometimes depending on the plan, you can get a little bit more money in year two, right? But so you only
Mm,
paid for a few months, but now
correct.
you get that whole year, and then year two
Ooh,
comes, you can go again in January, February, and then you got a little bit more money to go to the dentist again, getting that second cleaning. So a little bit of a hack. Best time for health insurance is like in the fall,
mhm.
towards the end of the year. Yeah.
Okay. And I'm glad I remembered that because I was like, oh yes, there are some folks that they're like, I haven't been to the dentist in months, years.
Right.
I'm like, I get it.
But because of that, I find entrepreneurs are better flossers, though. That's what I find too, right? Because yeah, you can't fall back on like, yo, I'm going to the dentist in like 3 months anyways with my benefits, right? So, and that's the thing, benefits are like a trap. Like, so if you're trying to get like freedom and like get away from your horrible job, I swear,
Yes,
benefits will keep you at that
it's true.
job,
It's
right?
true. It's
So,
true.
and sometimes people need them though, because they have children that need to go to the dentist. They got
Mhm.
children that need this or that, right? Medication. So
Yes.
sometimes, yeah,
I
yeah,
actually I know like stories where someone's like, yo, I do this on the on the side. Like I
yeah,
have my business on the side and it will pay me
right,
more, but no, this workplace give me benefits.
right,
Yes. And it's just like, but if you make more, then you don't have
yeah.
to worry about your benefits
Right,
because
right, right. Yeah, you just take out
essentially
an
it
individual policy. Like, yeah, if you sit
yeah,
down and crunch the numbers and do the math, then figure out what works for you, right?
and it comes with a budget, right? It
Exactly. It comes with the
comes with
budget. You got it.
budgeting. Because
It
if
always comes down to the budget. Budget queen, Camille, budget queen.
I try. And oh, what advice would you like give anyone like that's concerned about I know you've dropped a lot of gems because you
I
dropped some
know. I
hikes
talk
and
so
all
much.
hacks
Yeah.
hacks and all that stuff, but
Okay,
like
cool.
for let's say let's talk to the late 20s early 30s folks.
Okay.
What's the best advice you would give them
Sure.
about protecting themselves?
Okay.
Because
Yeah.
and it's I shouldn't even have to ask this question, but I
No,
want
no,
you
no.
to
It's a
talk
very
to
good question.
me.
For anyone who's young and coming up, right? Young professionals and whatnot.
Yeah.
Most young people are more concerned about investments. So they mostly want to look at, where can I start making my money grow, which is great
Mm,
because I think if you're young and even if you're not making a lot of money as you're young, just
yeah.
start investing now. That's the advice that I would give. Because even if it's like $50 a month, for example, putting it away,
Mm,
compounding, you have time on your side. So that's something that I talk about with the Black Moms groups. Is
yeah.
just start. Don't worry about
Uh-huh.
how much you have. Just start, get those good habits flowing, right?
Yeah.
And so yeah, for sure, you have that option. And then but also young people don't have any children, but something that so they don't really see the value in life insurance until they have kids. But I would argue, keep it in mind, give it a consideration because something you're not thinking about is when you pass away, you will have taxes. Trudeau wants his money after you die, so he's going in your pocket. Don't get it
Trust
twisted.
me.
They even tax you when you pass away. If you're
Mm-hmm.
young, chances are you have some debt, some school debt and whatnot. If you're young, right?
Yeah.
Maybe some credit card debt because maybe you didn't make all the best decisions as you're young, right? You got, you turn
YOLO.
18, got the credit card, ran it up, whatever, right? So you could
Yeah.
be leaving if you pass away prematurely. You could be leaving your beneficiaries, your parents, right? Your siblings with that debt. They gotta pay it because tax man is coming for it. Someone's gotta pay it, right?
Yeah.
So it's actually good while you're young. It's cheap. Get a small life insurance policy for yourself.
Mhm.
50,000, 100,000 of term,
Yeah.
or ideally get a permanent policy because that's also
Mhm.
cheaper.
Yeah.
Invest in a
At
permanent
that age.
policy. Maybe you can build some cash values. You can draw from it in the future, pull cash out, right? That can be either a whole life, a universal life is one of the more complex types of policies. I'm not going to get too into that, Those build castles are invested in the market. They grow with you. They grow with the markets. Right? Universal Life. Make sure that bad boy is overfunded or funded well, right? You know, you want to put a lot of cash in there in the early years with Universal Life. That's very key. You know, and keep an eye on that with your advisor every year, at least annually. But yeah, invest in these types of things so you can make insurance grow. It can be an investment as well. So you underwrite your health while you're young and healthy. It's also the cheapest it's going to be while you're young and healthy. And you can have that where it's invested and growing, right? So, and building cash. So it can also be an investment as well in yourself. You know, be your own bank, right? Life insurance policy, you can be your own bank.
True.
But if your credit's not good 10, 15, 20 years from now, who cares? You have your own life insurance policy you can pull 10, 20 grand out of. So who cares?
Yeah, exactly. True. Because I think I've been hearing more about whole life and the cash value with being able to be your own bank. So I see I'm coming to light, because there was a time when I was like, this does not make sense to me.
I hear you.
Right? So but I'm getting to understand it, because obviously I'm working towards building wealth and having a different mindset.
Gotcha.
And so I'm glad you mentioned that, like, just start young, because
absolutely.
You don't want to be like 30 odd or 40 odd and
or 50 odd. Like, I have clients who are over 50 and they're healthy, thank God. But I'm like, dude, why didn't you start sooner? And they just put it off for whatever reason, right? We procrastinate by nature.
You never know.
No, like, and now, I mean, the policy could have been paid off by now, or almost paid off, maybe, or halfway paid off, whatever, right? But they put it off, and now they're older, and now they're just paying more. And you know what I mean? They're just paying more for coverage that if they took it out 10 years or 15 years or 20 years before, would have been in great shape. Right?
So to my ladies and gentlemen that are in their 30s or late 20s, get it now.
Absolutely.
Even as soon as even if, I would say everyone, but even if you just start working, you're in your early 20s, get it. Because
that's right. Look into it. Yeah.
Or
make it part of your plan.
Yeah, it doesn't hurt to acquire about it, because it's something that we can't escape, right?
Death and taxes. Only two guarantees in life. Death and
Only
taxes.
two things for sure.
Not happy, not sad, not rich, not poor. Death, taxes. That's it.
Too bad we can't be all rich, right?
You know what? Maybe. I think things are changing. I think our community is starting to get more into investments over the past 2 years, which is really exciting for me to see. There's a lot more financial literacy now than there used to be in our community.
But some people are still, generationally. Some are still scared. I'm not gonna lie.
We have a long way to go.
Still scared.
Yeah.
Like,
yeah, for sure.
But even like last year I'm trying to remember when I started it. I think in 2020 and 2021, because the year just started. Me and my other teammates were teaching kids about the stocks, right?
Nice.
And let me tell you, they're slapping us. They're like, I was like, where did you find this stock though? Like, I don't understand. They're like, oh yeah. I was like, really? And then I was sometimes naive, and I was like, yo, one apple, I'm not getting apple, da 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 da. And the kids won with apple.
They did.
I was like, wow. I get it.
Okay.
Also, I like to ask people this question, because I think it makes you think about back in the day, what are 3 things you wish you knew about money or personal finance, like when you were younger? When we're playing football and things.
Right. Gosh.
That was a hard one.
Honestly, I would say I wish what would have been nice, because I always heard about investing.
Yeah.
Dad told me to invest, but I didn't really what it meant, like as a child.
Yeah.
So I would probably say the concept of like investing in like companies that pay dividends,
Yes.
That's a
Big up
pretty
the
advanced
dividend
topic, though.
stocks.
That's a pretty advanced topic, right? Like
Yes.
dividends. Essentially, it's a company that, if you own a share of
They,
that company, they'll pay out a certain percentage every quarter
yeah.
based on their performance.
Mm-hmm.
But you can what's interesting is that over the past year, I've come to know that year or two that, if you acquire enough shares, you
Mm-hmm.
can literally acquire enough of that company to pay
Yes.
your bills because every quarter you'll
Mm,
have a check coming in.
true.
So that's one thing that, imagine we knew that years ago, and our parents
Right?
knew and they taught us that. So I think that's something that I want to pay forward, like just the concept of investing in
Dividends.
quality companies that have been around for a long time that are paying dividends. That's probably like one major thing. But that, again,
Yeah.
wow, that's more of an advanced thing. So I don't know if that's something that I would have thought about, years ago.
Unless
Um,
you were like thinking of like Coca-Cola, um,
yeah, for
uh,
sure. Or even like Rogers, for example, they pay a
Rogers,
really nice. I think
yes.
Rogers are like, was I thinking
Enbridge.
Rogers? Rogers, TELUS, some of the telcos always pay
But you know,
Enbridge,
we didn't like
exactly.
them type of company.
Right, exactly. They're boring, right? They're boring. So you need
Or
someone to
was it
like,
even that? It's just like, oh, they're robbing me. But imagine if you had your Rogers bill, but then you had
right.
your stock, and you're like, oh, I could just pay my bill.
Exactly. If you have enough Rogers stock, they can pay your bill, essentially, right? So
Yes. Let me
that's
see
it.
how much Rogers used to
So,
be back in the
over
day.
time, if you're accumulating these things over time, right,
Mhm.
then there's enough to pay the bill.
Exactly. And that's what I've shown. Like last year, I was showing people how much I make with dividends and how much I made with
Okay.
interest. And
Nice.
I made
Nice. Good
what?
for you.
And there was one stock that did very
Oh,
well.
okay.
And they
Glad to
then
hear
they
it.
added dividends. And I
Oh,
was like,
wow. You
ooh.
got an early. Good stuff.
And
Good
then they
stuff.
increased their dividends. I was like, yo.
Big, 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 big. That's another thing. What I should have done, like in the pandemic, was invest in bank stocks because they tanked in 2020, and now they're
Everything
hitting highs, like all-time
right?
highs. RBC,
Energy.
all that.
Don't sleep on the energy. I think the
Yeah,
energy
right.
right now is doing very well and
Yes,
things.
yes,
So
it
big up
is.
energy stocks. And so
Man, we
that's
could we
what
could
dividends.
if we're not careful, we'll spin this into a whole nother conversation. We could do that.
I ain't mad.
Wow,
I ain't
just
mad. But
yeah.
dividends, what else? Because you have two more. You have two more. Three things that you wish.
Right. Oh, you want three?
Yes, no, three.
Right. Okay, 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 cool,
So
cool,
I'm
cool.
helping you. I'm helping you.
Yeah, shoot.
Write this down.
See, I would say,
Hmm.
man,
Don't worry, it could be anything in money, finance, or in the industry that you know, right?
for sure, for sure. I
God,
mean,
so many.
oh my gosh. Um, you know what? I
Mm.
probably, I if I knew, no, I knew that in my 20s too, though. About like just kind of investing. I was thinking about like compounding and stuff like that.
Mm.
Um,
Hmm.
I'd probably say something. I think I did waste a lot of money in my earlier years. I think,
Oh yeah.
if I knew to start stacking earlier and making sure I
Mhm.
had like, oh, you know what, setting your zero. That's something that I wish I knew a long time ago.
Setting yours
So what I
zeros.
mean by that is like when we look at our bank account and we see,
I know what you're gonna
no
say.
money in there, right? You know where I'm
Yes.
going with this, right?
Yes.
Um, you see $0.
Correct.
Or if you're in overdraft, that's your zero, right?
Mm-hmm.
But
I know. Okay.
setting, right? But setting our zero. So what does
Yes.
that mean? So like making sure that you have, so there's like true zero, which is $0. And then there's
Mm-hmm.
like say maybe having a minimum balance of say 5,000 in your bank account or 10,000 in your bank account or 15
Yes.
or 20 grand, like
Yeah.
whatever that is to
Mm-hmm.
you,
Yes.
making sure that it's above that baseline. So that if let's just say your zero is like 10 grand, I'm going to set the bar there for the
Yeah.
purpose of this call. So let's just say baseline is $10,000. If you're at like 12,000, you're starting to get a little bit worried, right? And you don't want to go below that zero. You don't want to hit 10
Exactly.
grand because then that's your zero. That means you're broke. Nobody else got to know what your zero is. You don't have to share that with anybody.
Exactly.
Because when they come for you and they come asking you for money and saying, yo, can I borrow a 1, 2? You'll be like, nah, sorry, I'm broke.
But I thought you had.
Yeah, don't worry about all that. Yeah, you thought wrong. You thought wrong. I'm broke, right? So I think getting our mindset out of zero or overdraft as being like, I'm broke. Yes. Nah, that's got to be different. It's 2022. We need to get out of that. Yes. Set that bar, work towards it, get that account to $1,000, work it, maybe just incremental, take steps, find out what you want your zero to be. And then everything else.
We don't want too much into the bank, because the bank isn't our friends.
No, for sure. That's, you're absolutely right.
But I do respect
you get what I'm saying,
that.
Right?
Yes, I do respect that.
Because you still need emergency cash, right? You still need money in. This is where I will never say for someone to you should always have your money accessible, right? You can take the money out of the bank and put it in cash in your basement or wherever. What if there's a flood? What if there's a fire? That cash is gone, right? So, even though we have inflation, let's have some money in the bank. Yes, it's losing its buying power, but it's there just in case we need it in an emergency. Everything else, honestly, should be invested, whether it's in a brokerage account, whether it's with a financial advisor, TFSA, RSP, growing, invested, right? Yes. Bills are paid.
Setting your zero.
But once we have that zero to set, whether it's $5,000 or $10,000 or whatever works for you, know? Yeah.
I like that one. I like yes, I believe my family and I, we have that number, and I get nervous sometimes. I'm like, hold on.
Yes.
You said it was gonna be this, and I feel like getting a little bit low. We gotta fix this, right?
Right.
So it's crazy, right? Even though it's not zero, but it's at that zero that you have, and you're just like,
and stick to it. Don't waver.
Yes. Don't see that and discipline. Then go to a trip.
Discipline.
Right?
Exactly. Because to build wealth, to generate wealth and build wealth takes discipline. So if you start getting wishy-washy on your zero and saying, oh, okay, it's cool, I can go down to 8 or 7 grand, you're not gonna achieve your goals. You're not gonna achieve your financial goals. No,
it's always about discipline, right?
It is.
Okay. Sure. So that's the second one. So setting your zero. So you have one
more. You're really working. You won't even just let me off the hook, eh?
NASA.
And I'm not saying I know everything. I never knew everything from a young age, but I've always been an avid saver. I used to literally go to the bank and put $1 in the bank account every single day.
Nice.
When I was a kid.
But we never knew. We always saved, but we didn't think oh, why am I gonna save it for later? But then all of a sudden you're like, oh, this is why. Okay, I like the saving. Right?
Yeah, when that day comes, I'm telling you, saving is huge. I probably would say, my first life policy was at 28. That's when I bought my first property at 28. So that's when I took up my life policy.
Okay.
So my gosh. Put me on a spot here. Something else.
Anything. It could be anything. Because saving.
You know what? Just overall, even myself, I've learned so much over the past 2 years about investing, right? Myself, because even when I first got into this industry, all I did was insurance. And it wasn't until I started doing more investments with people, TFSAs and RSPs, I started doing those into my second year maybe. I realized how amazing that can be. And so, I've been building up the investment portfolio side, and I enjoy doing it.
Nice.
And I just love investing so much. So I really take a hands-on approach with my clients. But I think just understanding the different things, the different modes, there's Forex, there's options, people have been trading options since the 70s.
Wait until you talk about futures. Jeez.
Right? Futures is next
futures?
level.
Futures is
I do know of them high level theoretically, but I don't really understand them fully. And
don't worry.
But I heard those can be very lucrative too, right? So yeah, so these things,
Tools and
keys to wealth, like
yes.
that was not passed down to me, right?
It's just
But best
accept.
believe, God willing, if I ever have any kids someday, that's
Yeah,
getting passed down.
absolutely.
There's no
You're
two
gonna
ways
teach
about it.
them from when they say "goo goo gaga." Come, come,
That's
come.
it.
You're gonna
That's
learn
it.
about
That's it.
options,
That's it.
calls,
100%.
puts,
That's it. You know what's up. You know
calls,
what's up. You know
puts,
what's up. That's how
covered
we're gonna have to
calls. They'll
do
be
it.
like,
And
what?
that's what's really gonna build the generational wealth, the information, the knowledge, right? We implant
Exactly.
it,
We
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 can't
have
lose.
to we have to transfer it to the
The
youths
next generation,
because
1000%.
and then you know what's a joke is once you pass it on to the youths, like the adults would be like, what? Hold on, hold on. What did you tell me? I
Right?
gotta take notes of like literally with the course that I did with the kids, there was
Okay.
times the adults would be like, oh, so say they were doing like this on the side, so not in the stimulator, would
Okay.
would they buy Apple? Like, how do they buy it? Just the same way they did that. I was like, oh, okay, for that, it's the same price. They're like, yes.
Yeah,
I'm
yeah,
like,
yeah. Exactly.
come
That
on.
sounds interesting. I want to talk more about that. We can take it offline, but yeah, that what you're
Yeah,
doing, what you're up to, that's really dope. The classes
it
that you're teaching, that's
it's
awesome. Good for you.
honestly it's so amazing because I this is what we do, right? It's just
Yeah.
really I'm really passionate about
Good.
helping the families and the community
Yeah.
and just
Wicked.
bringing them
Lifting
up.
them up.
So it's like
Absolutely.
when the time comes when it's like, yo, Camille, I made like $10,000 when I was
Amazing.
10 learning about this stuff
Yeah.
and I started doing it. I asked my mom to open an account. I'm like,
That's it. That's it.
oh my
I got a
gosh.
question for you. In the
Yes.
States, they have what's called custodial accounts. I'm sure you're aware. Do we
Hmm.
have those in Canada? Because I don't even
We
know.
don't. And you know what? People have been asking about that, like left, right,
Okay.
center. They're like, how can I get this? And I'm like,
Uh,
honestly, there's two ways. There's the RESPs, as you know.
yeah. Yeah.
And then also the government, when you put a certain amount, the government gives you 20% of it. So
That's correct.
that's free
That's
money.
correct. Yeah, the closest thing to a the RESP is the same as the 529 south of the border, but it's probably the
Correct.
closest thing we have to custodial account because you can open
Savings
an
account.
RESP with Quest Trade. You can trade in that if you
Exactly.
want, and your
And
kid's the beneficiary, right? So
yes, so you could do that, or you can even open up a account. But the only
yeah,
thing is people, so say you open up like a regular cash account
yeah,
and then you put the kids in the beneficiary. You have to pay the taxes that you receive for the time being until they're 18. So
that's true.
I've explained it to people. They're like, no, son,
Yeah,
I don't want to pay no tax. I was like,
exactly.
guys, it's still benefit. Like, okay, then put in the
Still,
RSP. They're like, oh, but then
right,
they have to just go to school if they don't want to go to. I'm like, yo, it's either you do it this way or that way.
right,
We're
for
not
sure.
like the States, and it's crazy because you know how many times we see things from the States and they're like, oh, can
Yeah,
we do it in Canada? I'm like,
yeah.
no, no, it's so
Sorry,
frustrating,
it
especially the
is.
houses. Oh, I got a
Hmm.
house 5 years ago. I got a house for $60,000 and it boosted
Yeah.
up to 300K. And people are like, so this is in Canada? I'm like, it's not. Like, I'm sorry for posting it. I just want to
Okay.
give you guys inspiration. So I'm
Jokes.
done doing that, right? But
I hear
that
you.
was a good question because a lot of people have been asking me, and it's either you put in the RSP where it goes
Yeah.
towards their education, or
Yeah.
you have to open up a different account where
Got
someone's
you.
going to be paying the taxes,
Got you.
unless you put in your tax-free savings, right? And
Right.
then eventually you can transfer it to them.
Yep.
So,
That's it.
damn if you do, damn if you don't.
That's it.
Right?
Burning up here.
So what are the lovely adventures or avenues that you want to do with your business?
Oh, that's a good question. That's a good
Mhm.
question. No, I'm already educating and I love educating. So we have the Black Moms connection with that, right? So that's
Right.
it. That's awesome. You know what? I definitely want to, at some point, I
Mhm.
want to get into more what's called sort of buy and sell agreements
Okay.
with my business, which is more like, in key man insurance, for example. So
Mm.
this is where you're working more with the entrepreneurs, like, the CEOs, the CFOs,
Yeah.
you know, the um, the key people
Yeah.
who are driving that business, right? So like what happens, for example, if for in terms of key man insurance, what happens if that lady or a man who generates a lot, your top sales guy, your top
Mm.
saleswoman,
Okay.
whatever the case
Yes.
is, they
Yes.
generate a lot of income. If they go down and they fall ill, right? How
Mm.
do you replace that income? That's called key man insurance, right? So it could be, it could be tied up into a critical illness policy
Yes.
that the corporation pays for, or
Mm.
it could be also a life policy as well, right? Where the business is the beneficiary, right? You can and then or you can do something like where um so like buy sell agreements, for example,
Yeah.
you'll have and these two are more complex like situations, but high level, let's just say you have a partnership, you got two people and they're a partner in a
Yes.
business.
Mm-hmm.
If one of them should pass away,
Mm.
then the beneficiary the proceedings of the person who passed away, that
Yes.
money can go towards buying out their share of the company. Right?
Oh.
It can do a few things. It can buy out their share of the company. It can also
Yeah.
be used to, like if there's shares involved, it can help to, absorb those expenses as well.
Mm.
So, yeah, those are a couple of things, but it's more, that's definitely more of a very bit like a niche
That's
kind of thing. You'd have to
yes.
spend a lot more time doing that,
Mm.
but at some point, I think that's something that I would like to, get more into and dealing with
Nice.
more higher net worth clientele. Yeah, with
That's
those
that's
things.
like serious education on your behalf because you'd have to know
Oh yeah.
like the ins and outs of those wonderful
Yeah, for
things.
sure. How to talk it, how to present it, right? But once people see these types of policies, they're like, "Ooh, I never thought of that before," and gosh, right? So it's
Yes.
something that a lot of entrepreneurs and business people who are building their businesses, they do want. They just don't even know that it exists or the options are there.
Mm.
But once you get a chance to show them, they a lot of times they see the value in it, right?
Mm.
And sometimes and oftentimes the business just pays for it, so it's like it can be written off in some cases too, right? So
That's a
that's
good
something
one.
that's very interesting. Yeah,
That's that. Whew.
yeah.
I've never heard of that, so I'm just like astonished
Okay,
and
okay.
okay.
Yeah, they
See,
test
now I
us
have
on
to
it.
do some. Now I gotta do some homework too.
Right, fair, yeah, and something to keep your eye on, right? Could be keep your ear on. Like it's they test us on it when we're getting our exams and stuff like that. But it's like
Mhm.
it's in the modules when you're studying for your LLQP, for your
Yes.
license. But yeah, it's just one of those things that unless you actually start practicing and doing it,
Yes.
you don't see it too often. Yeah.
Okay. And also, I know there's one other thing that I've been pressuring you about.
Oh, what's that?
One sec.
Oh, you're gonna do all of that?
Yes. You gotta do it. You gotta do it. You gotta, present
Wait.
yourself more on social media.
Oh. You're gonna come.
I
No,
know.
I don't have a website right
It's
now. This is
okay.
true.
But you have social media, right?
I do. I have social media. So yeah, you can find me on Instagram and Facebook, Jumoke Financial on Instagram, Jumoke.financial, sorry, on
That's very
Instagram.
important. Yes.
Yeah, my name is a tricky one to spell. Jumoke, okay, dot
Oh,
financial on
I
Instagram,
love
or
your name, by
Jumoke
the way.
Johnson on Facebook or Instagram. You can find me there.
Yeah.
Everything's wide open and public, right? So yeah.
Oh, you can't have it too public. I'm just
No, it's that's it. No, mine is all the way public, right? But yeah, I
yes.
don't post any personal stuff on there. It's just like all business or social
And
issues that I'm passionate about,
I
stuff like
just
that.
realized we're in a lot of groups, Facebook groups. Like we're in the
That's very possible. Which one are you thinking?
there's, there's the Black Toronto one for sure.
Yeah,
There's an
yeah,
investing one. There's an investing one.
yeah.
It
There's a
has to
few.
be BCI. It has to be. It has to be.
Okay, okay.
Oh, I know there's another one. There's
Wealth
another
Creations or something like that.
Yeah.
There's a few investing groups.
There is, and there's one that I'm gonna say his name wrong, so I'm not even saying it. But I think we've wanted like to have discussions about just different topics, or we wanted to have like you want to meet up?
Cousins.
Yes,
Canadian
yes,
cousins.
yes.
Yeah.
Canadian cousins, yes. Where you just wanted to like link up with
group.
people.
Yeah.
Because that's a good
idea. Isn't that a great idea though?
Instead of just, instead of like, you can have some music and stuff. I remember going somewhere and someone was just talking about, people love food. So why not have some food, some drinks?
Right? We're going to be talking about money, investing, food, drinks, everything, man. Why not?
That's something that we have to like start doing.
Come on, man. This pandemic's got to end at some point. Come on. Let's go. Can we start living yet? What's up?
Right? Hey, you know what? Secretly, I'm okay staying in, especially wintertime.
Right. Oh, for sure.
Monday, no one could get me out of my house.
Okay.
Like, and I know this is ranting off, but like anyone that lives outside of Canada or outside of the area,
don't kill me.
We had a crazy storm that like, I don't think I've ever seen one like, there was one in 3 years ago, but like this bad, it had to
this was bad. This was bad.
And stuff. So
I
don't care if all like the Americans that live down south and they make fun, don't make fun of us, okay? We are cold. We're trying
half the time they get it worse than we do. Half the time they get it worse than we do. Let's be honest.
Well, New York tornadoes and no. New York's different. New York, you have the same temperature. You have the same weather as us. Chicago,
exactly. They can't talk.
Weather. You can't chat about us. You can't say igloos and all that stuff.
I think Wisconsin too. I think Wisconsin gets pretty bad. So
right. So
Milwaukee Bucks. Shout out Giannis.
True.
Champ.
Oh man, Jumoke, it's been wonderful. What do I have any other questions? What do you want to say? Do you have any questions? You want to say anything?
Oh gosh. Yeah, you know what? I know, like, you know what? Gosh. I'm gonna shout out my financial advisors, because like honestly we take a lot of heat, a lot, and everyone out there who's giving financial advice, and a lot of them are great and brilliant and have tons of money and are super successful, right? And they always have a disclaimer: this is not financial advice. I'm not a financial advisor, right?
True.
I don't have to say that. I don't even have to say that.
You're like, right? I am. Shoot.
I am, and I'm gonna own that, right? I am a financial advisor. Okay, guess what? I am a financial advisor, right? So, but doesn't mean know everything? No, of course not. But what I do want to say is that there's a place, and there's a place for everyone. Correct. Not everybody wants to be that hands-on, learn about stocks and research companies and all these things, and want to know about, support resistance and like, RSI and all these things, VWAP and all these things. And when I say those things, some people's going to go right over their head, right? So and that language will speak to certain people, right? Correct. You'll understand what I'm talking about, but not everybody does. And not everybody wants to, let's be honest. So what I'm saying, and the reason I share that is like, look, for many people, they just want to either focus on what's important to them, their families, spending time with their kids, they're spending time with their significant other, or getting really, really super good at whatever it is they're passionate about, what they do, their craft, their specialty, whether it's, in the arts, music, acting, whether it's, making things with woodworking or a trade they want to get really, really good at. Yes. And they just want their money to grow. They just want to have their future secure, right? You're doing yourself a service by, if that's you in the latter example, and you're more of a hands-off approach, you're doing yourself a service by linking up with an advisor that you get along with. It's got to be a two-way street. So ask the
Yes.
questions, get to know them, see if it's a right fit. Because there's all kind of advisors out there. Some of us are trash. I'm just gonna put that out there. We got a bad rap because of all the trash advisors who are greedy and just focused on only they're getting in their commission, right? You know what I mean? I don't come from that perspective. I literally
Yeah.
put my clients' needs first.
Awesome.
Even when it does come to me making less of a commission, because I don't care about that. Because my clients' needs comes first, and I gotta make sure that they're happy, their budgets are met. And I take that philosophy on, you know, with a higher probability of me either retaining their business and hopefully,
Yes.
you know, getting more in the future and referrals. So I'm not concerned about the short money. I really am not. So make sure you find an advisor that you're comfortable with, who
Mm-hmm.
communicates well with you, who you understand what they're talking about, and you can ask them questions. Ask them questions when you don't understand something, and they should be able to answer in such a way, in such a fashion that, you know, satisfies you, right?
Exactly.
So, you know, I would just encourage, don't try to go out on your own. You know, a lot of people don't really understand how money works. So, you know, link up with someone, have a mentor, have an advisor, to help guide you through those ropes and help to navigate you into some of these tools, in and out of some of those tools, and work with you. We're just there to help support, you
Exactly.
know, guide. And yeah, man, investing is fun. When you start seeing your money working for you and growing, it's fun. It gets exciting, right? It gets addictive, doesn't it? So, you know,
It
plug in.
does. But these days, jeez.
It's rough. I know, a lot of red these days, right? Hang in there, hang in
Oh,
there.
geez. So I'm just like,
Yeah,
what? I'm not even gonna look at you right now. Once it gets to a certain point, like obviously it is a buying opportunity right now, but dang.
I know, right?
But
Dang, I feel you.
dang.
I feel you. I feel you.
So
Yeah, no, patience,
anyone
patience.
in patience. Oh my god. See, you always just go on. I wanted
Got
to
the
do
horn
that
for that?
from time. And it is patience and discipline, and that
Yes.
that just comes with wealth, right? And learning and
Yeah.
stuff. And
Yeah.
Matt, Jumoke, I know we've been going like on for
This
for a
is,
good
yeah,
while.
this
So like I'm not gonna we're having a great conversation. That's what it's
it's
about.
great.
Like
Yes, cool.
the like us, you know, knowing each other for like a good while and
Yeah.
finally having the
Some years
opportunity
now. Some years
to,
now. Yeah.
right?
Yeah.
Finally having the opportunity to discuss about things that we're very like-minded about. So
That's it. That's it.
I appreciate you, sir, for coming on and
Absolutely.
just, you know, showing the gems, the hacks, and just resurfacing things that
Okay.
we don't know, you know.
Absolutely.
And finally, we are able to get an idea about it. So please, folks, ladies and gentlemen, reach out. I'm gonna put your contact in the
Okay, cool.
description, but as you know, it's being recorded early, so
That's
I'll be
right.
here Saturday. But it's all good, you know,
All
guys.
right. Wicked.
Like, subscribe, share, and
Yes. Thank you for accommodating me. I appreciate it.
no problem.
Appreciate it.
We gotta stick together, and you are for the community, whether it's families, Black moms, and also the
That's it.
entrepreneurs.
Yeah.
We gotta stick together, you know.
Absolutely. Absolutely. All rise, right? Here to
Yes,
help
sir.
anyone. But if I had one last thing I want to say is that
Mhm.
realize for everyone out there listening, if you lasted this long on this call,
They will.
realize
They will. I got some
that
real MVPs.
please realize that you are the most important and valuable resource in your life. So although your car has insurance, although your TV, your Samsung has insurance, although your iPhone has insurance, right? Or your Android, you got some warranty on that, that's insurance. You got a warranty on your fridge, that's insurance. Remember that you are your most valuable asset.
True.
If you break or you disappear, you can no longer generate income for your family. So protect yourself, insure yourself, just in case something bad happens. Don't wait until it's too late, please. That's the
True.
last thing I want to say.
Thank you, Jim. That's it, folks. And on that note, like Andre has his song and things, I gotta represent.
All right. Okay. Nice.